Thanks, everybody. Can everybody hear me? Yeah? Okay. Great. Well, thanks for your time today. The title of my short presentation is It's a Trap. Everybody's seen this movie, I suppose? Yes? Get the reference, the Star Wars meme reference? Okay. I thought it was funny. But at a conference like this, you'd expect someone like me, a CEO, to tell you in very uncertain terms, in a very direct manner, why our company is awesome and why our immediate future is awesome and why our long-term future is bright as well. But in the last 20 years of buying and selling video game companies, I found that the things that most investors want to talk about are almost never the things that a great game company really thinks are important. And if you don't believe me, just think about 2 years ago. By the way, on the flight on the way over here, I finally saw Ready Player One, which production started, about 3 years ago, 2 years ago, based off of a book that was, I think, printed, I'm guessing, at about 4 years ago or so. But 2 years ago, if I came to this conference or a conference like this, every reporter, analyst, and investor wanted to talk to me and every other video game executive about VR. Why? Because there were many, many billions of dollars being invested by the most articulate people in VR, and they knew that this was the future of video games. Remember, Facebook had just bought Oculus. Billions, actually tens of billions of dollars was going in venture capital money. None of these guys admit it now, but tens of billions of dollars was going into the VR space at that time. Well, guess what? That turned out to be a financial train wreck for everybody involved. You don't read about that now because everybody doesn't want to talk about it, but that's what's going on. And a few years before that, I was leading NEXON's IPO, and this was 2011, end of 2011, and every investor that I met, and I mean everyone, wanted to know what our Facebook strategy was. They'd say, hey, Owen, congratulations. You guys have 35% operating margins. You've been growing at 15 to 25% year over year, but we all know that the future of online games is Facebook. So what's your Facebook strategy? Well, guess what? That was mostly a complete bust as well, and a lot of billions of dollars were lost. Or they want to talk about esports because they think it's going to be the driver for growth going forward. And by the way, this is a picture from NEXON Arena. It's a full-time sports arena in the Gangnam area of Seoul. It's the first of its kind. We've got about 300 events a year. You can see the picture here. It seats about 550 people. So we speak with a lot of knowledge that we say that even esports is definitely not the most important thing going on in video games right now, even though this comes up in almost every meeting. Or they want to talk about app store rankings. Or they want to talk about launch dates of new products. Those are the buzzwords of our industry. In fact, I'd go so far as to say that none of the things that you've learned from the traditional games business or the broader media industry equips you to understand online games. Now, I see some people laughing in this. Maybe you're laughing in agreement or you're about to laugh me out of the room. But if I'm right, then this is a huge, huge problem for you as an investor in the online games business. The world is very clearly going online, and that's happening in video games as well. And you will lose money as an investor by using your current understanding of games to invest in this new world. And for me, as an industry executive, most companies in my industry will get severely mispriced. And to a large extent, that's exactly what's happened over the last few years. So today, rather than trying to sell you on NEXON, I'm going to try something a little bit more ambitious. I'm going to try to show you the 3 really big traps that will cause you to lose money, and then I'm going to give you an alternative way of thinking that will hopefully be more helpful to you as you try to place money. And to my knowledge, nobody has really done this before, and I'm anticipating you're going to be a little bit skeptical. So I'm going to try my best to make it entertaining. So I've invented a fictional character. This smarmy-looking gentleman here is Lance. Lance is the hot-shot young media investor, and he's picked the video games industry as his next big target. He's made a lot of money elsewhere in media. He's invested in Disney and Fox and Time Warner and Sony. And he's been looking for a long time at the next great video game company, and he thinks he's found it. The game he's really excited about is called Bloodbath and Beyond. It's a new survival shooter game where you have to survive in a large domestic merchandise store using only the goods within the store. He's been hearing about the development for months, and he's very, very excited about this game. By the way, this is not a real game, obviously, and any resemblance is coincidental. As a side note, this actually was a pitch that I saw once, and it wasn't called Bloodbath and Beyond. It was called something a little bit more funny, but I don't think I should use that name here. Anyway, he's been talking to the publisher of the game, and the game seems to nail all the things that he knows are important when you launch a new game now. What can you imagine those would be? Well, it's mobile, and we all know the world is going to mobile. The developer's app was previously ranked high on the App Store. It's got beautiful AAA cinematic graphics, and we all know that cinematic graphics are what drive game sales. It's got loot boxes, and we all know loot boxes are the future. You got to have loot box in your game, and you got to monetize like crazy in order to make a lot of money out of a game. And the company is putting a huge marketing spend into the game, so we know that it's gonna make a big splash. And most importantly, it's got an esports strategy, and you got to have an esports strategy if you're going to have a successful franchise. Lance gets invited to the giant opening party, and of course, Beyonce and Pharrell are there, so he knows it's going to generate a lot of buzz. Launch parties are, of course, very important. And as a result of all this, the new game is the talk of the industry. Everybody is excited about this new game. The game launches, and the early returns are great. The next day, Lance sees it's doing well in the app charts. You can see that's number 2 up there. That big blood sign there is Bloodbath and Beyond. Lance is sold. He buys the stock because he can see the game's success in the app charts with his own 2 eyes, and he knows it's going to do well financially because they have a big monetization strategy. But after about 3 weeks, the game has dropped in the App Store rankings and keeps on dropping. And more importantly, 3 months later, the financials of the company come out, and he sees the game has lost a lot of money. He can't figure out what went wrong. Well, it turns out Lance was the dumb money. His crime was falling for the typical cliches of the video games industry, the ones that are repeated over and over again in and around the games business. His beloved game checked all the boxes, but those checked boxes led him to disaster. Lance learned the hard way that the points in his checklist, which nobody would fault him for, are bogus. And it boils down to a small number of really serious misunderstandings about the online games business. And since our time is limited today and just got a little bit more limited, I'm going to give you the 3 big ones. Lance's first big mistake. Remember, I'm going to give you 3, so this is the first one. The first one is one of measurement. He thinks that App Store rankings matter. He thinks this because almost everybody else thinks that the App Store rankings matter. Not just other analysts, but industry people as well. That means people in my industry will talk to him about app stores. They obsess about app stores. But the App Store rankings, the problem with the App Store rankings is they can easily make you think that a company is doing well when in fact it's headed towards bankruptcy. It can make the biggest loser look like the biggest winner. How? Let's take a quick case study and look at 2 games here. Game A is ranked number 9 and rising on the App Store charts. That's this one right here. You can see this. Sorry, it's a little small. Hopefully the people in the back can see this. Game B is boring. You can see it's ranked number 51 there. Lance looks at both companies' games, and which one do you think Lance is going to be excited about? Game A, of course. Game A's revenues are high and rising. Game B doesn't seem to be going anywhere. But then Lance gets a hold of their P&Ls, the respective companies' P&Ls for Game A and Game B. Revenue, great. As you can see, Game A is doing 62 in revenue. Game B is doing 31 in revenue. This could be yen, dollars, billions, what have you. This is illustrative. But then let's look at marketing. Game A is spending 45 in marketing off of 62 in net revenue. And Game B is spending, don't have my glasses on, 5 in marketing off of 31 in revenue. Game B is not spending a lot. They refuse to overspend their marketing money. If it's not good returns on their investment, they're just not going to spend. And after marketing, platform fees, and other costs, Game A is losing lots of money. Game B, the boring company, has lower rankings, but they are making a profit. Now, obviously, if you care about not losing money, you want to be Game Company B. But the market is looking at Game A and thinking it's successful. By the way, I'm not making any of this stuff up. This is daily work in the video games business, especially on mobile these days. So Lance talks to the management of Game B, and he asks them why they're not spending more on marketing to get higher revenue. It's a reasonable question. Well, their user acquisition, we call this UA, user acquisition head is doing the right thing. She knows that there's an upper limit on spending depending on retention and monetization. I'll come back to these two terms in a second. The shorthand term for this is lifetime value of a customer, or LTV. If your effective cost per install for a new user is above your LTV, you will, by definition, lose money. So we look at this ratio of effective cost per install. That's your customer acquisition cost against the lifetime value. We look at it all the time. And then she explains to Lance a very simple but an important conceptual tool called the retention funnel. And I'll just describe it for a minute. Think of users in a game, in an online game, as a bucket full of water. But the bucket's leaky. And every month you put more water or more users in the top of the bucket. And every month a few of those users, sometimes a lot, sometimes a little, they fall out the bottom. That's called churn. Very conceptually simple, but it's very important. And in the middle here is your active user base. That's monthly active users. Sometimes the activity is called concurrent users. This is a measure, sort of a derivative measure of activity. These are very important tools. But in the case of the game company A, the active user number will decline if people aren't sticking around in the game. And so the monthly active user number is a very, very important number to watch. It's very easy to fill up a bucket that doesn't leak, that doesn't have a lot of churn. It's very difficult to fill up a bucket that is leaky. You just keep working harder to keep the user base full of people. So why would anyone in their right mind want to pour water into a very leaky bucket? Well, going back to our example at the top, what gets measured gets managed, as our friend Peter Drucker said, and the answer is that App Store rankings are the one stat that almost everybody is looking at constantly. It's the number that's most easily available, and it's the one way to compare success across companies. So that's what people look at, and then that's what they measure. But if you ignore the underlying drivers, you're highly likely to get sunk. The app stores around the world are filled with money pits masquerading as winners. Recently, this happened to a company called Machine Zone that dropped very precipitously. You may remember the game Game of War. The advertising included Kate Upton, the model, and that game is nowhere to be found now because they eventually ran out of money and they had to stop advertising their game, even though a year ago, 2 years ago, everybody thought that this was an incredibly successful game. But for those companies, once they run out of money or they get a smarter or more honest CFO and turn off the marketing spigots, the game rankings drop like a rock. So how do you, as an investor, avoid getting burned? To be the smart money, you have to do a little more detective work. You're going to have to go beyond App Store rankings. One way is to go to forums. Watch them over time. These are game forums. See what people are saying. If they're in another language, get an intern who speaks the language to track the forums. It's not hard to do at all. We actually do this a lot. Or go to Twitch. I think everybody might be familiar with the website Twitch. It's twitch.com. You can watch people while they are playing a game, and you can talk to them while they're playing the game. You can chat with them anonymously. I do this just about every day. And you can ask them, what do you think of this game? And they'll talk to you while they're playing the game. They'll tell you what's broken with it, what they like, where they think it's going from here. Gamers love talking about video games, especially while they're playing it. And the good news is that none of this is hard at all. I know because these are all tactics, as I said, that I and we use every day at NEXON. Okay, so that's App Store rankings. We've moved on from that. That's the technical section of my presentation. The remaining two are a little more conceptual and therefore a little easier to understand, maybe. Not that the first one seemed too difficult. Okay. The second mistake is believing that success depends on new product launches. This one is so widely believed in the games industry that most people don't even talk about it. It's the belief that you can't have a future if you don't launch new games regularly. And since most people believe this, they focus on new product launches to evaluate game companies. Okay, I'd like to ask a question of everyone in this room. This is the interactive section of my presentation. Who here has met Bob Iger from Disney, CEO of Disney? Anybody? Yes? Okay. You're the first person I've met who has had an investor presentation with him. Now, sir, I hope you don't mind me putting you on the spot, but when you met him, did you say, Bob, It's been an incredible 60-year run with Disneyland. And now, when is Disneyland going to go down? Okay. I figured you might say that. But if you did, he might laugh you out of the room. The point being that Disneyland, we all expect, we've seen Disneyland go for a long time. We've seen that it gets bigger and bigger, or it continues to draw people back, and they continually refresh what's in Disneyland. What we don't expect Disney to do is have the expectation that Disneyland will go down, so we need to replace Disneyland with a new version, something more relevant or up-to-date. We expect them to refresh and redo Disneyland, even though Disneyland was built on an entertainment model and was in an entertainment ecosystem from a half a century ago. Hold this thought in your head for the next few slides so you can understand the disconnect that frequently happens between game company management teams, online game company management teams, and investors. Truth be told, most people think of video games as glorified toys, even sophisticated console games. This is true often even within the games industry, and I know this because when I recruit people from outside the industry, they oftentimes admit it to me. They think of games as a toy. Often, even the biggest nerds I know, people who work in San Francisco at companies like Palantir and Uber and their technical groups, their engineering development groups, they don't like to admit that they play video games. And since this is the image a lot of people have, it's very hard to understand why anyone would make a game a fundamental part of their life, which means it's difficult to see how a game will continue to grow for many years on end. But if you allow that bias to creep into your thinking, you're going to misanalyze our industry. A good online game is a virtual world that will keep you coming back for many years on end. Why? Because you're participating not just in a virtual culture, you're participating in its politics, and it's usually got a functioning economy. It's a virtualized economy, but as far as the world that you're living in, it's a functional economy. Game economies can get so sophisticated that game companies like us employ full-time economists, sometimes at the PhD level, just to manage the virtual money supply that's within the game. Your virtual social network can be every bit as important to you as your real-world social network. Now, to illustrate this, I'm going to use one of our games called MapleStory. It just celebrated its 15th year anniversary. And it has graphics that look like they were created 15 years ago because they were created 15 years ago. And yet, it's bigger than it's ever been. It's getting stronger, not weaker. In the most recent quarter we just reported, MapleStory was up 61% year over year in Korea, which is its biggest market. This is 15 years in. In our business, this is what's known as a forever franchise. Now, how does this happen? Going back to Disneyland. Like Disneyland, we are constantly refreshing the content in MapleStory. Our teams are constantly working, adding new things to do and new worlds to explore and deeper ways to interact with each other and in the world. And in this picture, you can see this is a virtual wedding. Two of the players are getting married. You can see in the lower left-hand, this is maybe a culturally relevant. There's a virtual Elvis. This is kind of a virtual shotgun wedding. And they're on a sort of virtual cake, and you can see baby Rain here is very happy because she and her in-game boyfriend just got married in the game. Sometimes people get married in games and then they get married in real life. This does happen in video games. But when you look at this game, you may be seeing a picture of an old game. You look at this and you say, and in your mind pops out the word old game. But what do our customers see? Our customers see massive game with lots of stuff to do. Lots of new things every month and every week. And respectfully, theirs is the correct view of the game. And for our business, it's the only one that matters. Now, the focus on new product launches blinds everyone to the intrinsic value in online games, especially in Asia. In our case, NEXON has some of the largest franchises in the entire media industry. Most people are surprised to hear me say this, but our largest game, which is Dungeon & Fighter, has generated well over $10 billion in life-to-date gross revenue. Now, to put that in some perspective, that's several billion dollars. Anybody want to guess at what the largest movie franchise is of all time? Any guesses? Good guess. It's up there. Any others? It's Star Wars. Star Wars came out in 1977 when I was a kid. Dungeon Fighter is several billion dollars bigger. At $10 billion, it's several billion dollars than the life-to-date Star Wars box office. Okay, so this is excluding toys and lunch boxes and T-shirts and things like that, but just box office to gross, meaning apples to apples, it's several billion dollars bigger. And Star Wars is the largest movie franchise of all time. Now, the difference, or maybe not the difference, but the thing to remember about Dungeon Fighter is it's getting bigger over the years, not weaker, bigger, stronger. And numbers like these mean that when you throw a live fan event, a lot of people show up. This is from our 10th year anniversary event in China that we just had. We just celebrated our 10th anniversary. The people who you see here aren't interacting with the IP once or twice every few hours as in other media. They're living in the game world every day, oftentimes for hours. This is an incredible bond between the players and their intellectual property. They make friends in the game. Some of them get married, as I mentioned. And then occasionally in the real world they get married. They have helped shape the game world. This type of IP power is rare in consumer media. And the key point here is that their affinity to their chosen IP is not just robust, it gets stronger over time. It's a bit like Disneyland. The affinity for this IP compounds over time. A little bit of it over time compounds into a lot, something that's really massive over a long period of time. And this is the reason why we think that games like ours are getting stronger over time. So as an investor, what does this mean for you? It means that you have a big potential problem. It means that your natural instinct toward the new will lead you to the hardest and most risky side of the business, which is in the launch of new games. And it'll lead you away from the part of the business that makes money consistently. And one way to think about this is from Moneyball. I assume everybody in this room has either seen the movie or read the book. Think about it this way. Are you investing in home runs or are you interested in winning games? Right, you're interested in winning games. And it turns out that getting on base is how you win games, and it doesn't matter how you do it. And paying up for the home run hitters turned out to be a loser's game, as the 2002 Oakland A's showed everybody. Online games works actually the same way. Do you care about product launches, or do you care about predictable, recurring, high-margin revenues? Right, you care about predictable, recurring, high-margin revenues. So how do you find companies that are doing that? One way is to spend a lot less time worrying about product launches. Watch the content plan in a game company's existing games. Watch the community within the games. Don't freak out about the near-term ups and downs of MAU and revenue. Don't freak out when a revenue growth rate is faster or slower than it was before. These are the natural ups and downs of a forever franchise. The good news is that almost everyone else will freak out and obsess about the unimportant near-term fluctuations. That's an opportunity for you. They're going to dump the stock, and that's when you can take advantage of the dumb money. And I promise you, since almost everyone else is looking at online games all wrong, you'll have plenty of opportunities to take advantage of them with just a little bit of extra digging. Okay, so that was number 2. Number 3 and last is Lance's third mistake. And I'm watching our time here, Jay, so I won't run too long. Lance's third mistake is to think he can invest successfully by looking at Bloodbath & Beyond's near-term results. He can't. Near-term results mean almost nothing in online games. As a result, Lance overpays for a company with a flashy launch and early buzz. But online games industry is in just 5 to 10 years will be radically different and bigger than it is today. We are at the very beginning of a profound revolution in media business enabled by online games. The monster game companies in the next 5 to 10 years, the ones that I'm really excited about, will be the ones that can ignore near-term competition and instead understand this revolution. This is not the usual suspects of game companies that are on everybody's radar. These are not the kinds of companies that are pandering to what people like Lance want to hear about. Now, my time is very limited today, so I'm only going to talk about one aspect of this, which is machine learning and AI, and how this will revolutionize the future of the video games business. And I'm going to give you 3 examples. Again, I'm talking about online games here, so keep that in mind. The first is in live game operations. Live game operations, think about live game operations, again, to torture the Disney example or the Disneyland example. This is all the stuff that we do within the theme park to keep the theme park running. We'll run Halloween events or Lunar New Year events. It'll include customer service. It'll be about retaining users. It's incredibly hard to do live game operations. We employ thousands of people at NEXON who do it. To do it and do it well and keep people coming back and hold that retention funnel is extraordinarily hard, and it's very easy to mess up, as many of my colleagues in the video games industry, other companies have found out. Now, I'll give you an example. Let's say we were all engaged in the same online virtual world. We're all in the same world together, and we're experiencing that world together. And this gentleman in the white shirt in the front here is probably going to exit from the game within the next month or so. Sorry, I'm using you as an example here, but now he will display certain types of behavior over that period of time that looks like he's going to exit. And he may not even know yet that he's going to exit the game, but he might fight battles a little bit less, or he might go directly to quickly go to a quest, or stop chatting quite as much as he used to. And a good live game operator will know that someone like this is about to exit the game. So we watch this stuff very closely. We use data and dashboards to spit this sort of information out so we can watch, so that then what we will do is we will give that person what we call a buff or some sort of incentive to keep on playing. This is daily life of a live game operator. Now, if we give him a buff that is too powerful, let's say it's a sword that's overpowered in the game world, he can use that sword to have an unfair advantage to kill the rest of us and take all our loot. Of course, we regenerate in the game, but that's one of the things that goes on in a live MMORPG. Now, when that happens, think about the impact of doing this wrong. He's overpowered, he's bored, because his game has suddenly become too easy, and so it's boring for him. He's more likely to quit, less likely to quit. For the rest of us who are playing against him, we're more likely to quit because we're frustrated, because here comes this guy who is much more powerful than the rest of the room. So that's a problem, and a good live game operator will test that and sort of cordon off people and test what works and what doesn't work, and they'll do this over time. This is very, very hard to do, and as you can probably tell, it doesn't scale well, because there has to be someone who is looking at player activity like this and trying to make this work right and get this balance right. Well, guess what? Machines can do this much more effectively than humans can. And we can A/B test the buff to make sure it doesn't hurt the balance too much between his play and everybody else's play. This is incredibly important, and this is one of the reasons why NEXON is investing so heavily in this area. It's a little bit like if you talk to the guys over at Uber, the people who are managing Uber, they want driverless cars because the hardest part of their business is running the driver's business. So they want to just eliminate all the drivers. At least it appears that way on the outside, because they want to take the most difficult business and part of the business, and they want to make it automatic. Now, for us, we're not trying to get the live game operators out of the equation. It's actually different and possibly better. It multiplies our effort 1,000-fold, and it frees up our humans, our people who do live game operations, to do better work. So we think this is going to be absolutely revolutionary. This means we'll have higher retention, and that means the economics of our games get better. It's extremely important. So that's one example. Second example is in online game development, new game development. People have probably noticed that if you want to launch a AAA game these days, it's costing hundreds of millions, if not, several hundred million now to launch a AAA game. Why is that? Well, the biggest part of the game development process, is sadly not on making the game more fun. It's just painting all these high-resolution images within the game. You have a mountain and you have a valley, and that's your battle area where all your adventures are going to go on. Painting that mountain, you have to do it at a very large scale, and then you have to go and paint every leaf. Now, there's a million techniques that you can use, like cutting and pasting leaves, but there's going to be people running around in that world, and they want that game to be very realistic. This is all done by hand, and it's very, very expensive to do. And now we can make machines, or we can have machine learning and AI paint those mountains and paint it down to a very small, a very granular level to make that world very realistic. And that's very exciting. We think that this will cut game development costs over the course of the next 10 years substantially, like by more than half, maybe a lot more. And the current trend of gradually rising game development costs for AAA development, which is heading towards $500 million and beyond for each new game, that's going to get sawed substantially. And not many people are talking about this, but this is very, very exciting from the perspective of costs for new game development. A third example is maybe the most obvious one because it's in science fiction all the time. It's AI agents, artificial intelligent agents. Most people have everybody heard of Big Blue or Google DeepMind? You've heard about this? Okay. You may have noticed that, have you heard of AlphaGo? Okay, so AlphaGo is the AI that beat a few years ago, the #1 player of Go. Go is an exceptionally difficult game to learn or to master. There are more moves in a game of Go than there are atoms in the known universe. So as an AI challenge, it's extremely exciting. What they did to make AlphaGo, by the way, the person who did this was an ex-game person. He made a game for EA called Black and White, or designed the AI for Black and White. You may have remembered for almost 20 years ago. They had Go. They gave the rules of Go to this AI. That AI played against itself thousands and thousands and thousands of times. And the first few thousand times it played Go, it made all sorts of dumb mistakes. Then it got a little smarter and a little smarter, and after several thousand times, it got to be a really good player. And a few thousand times after that, it beat the best player in Go. Now, we can take that same technique and we can apply it to first-person shooters and AI agents within a game. And this is very exciting because this means that we can populate very smart agents. We can tune it up and down in terms of difficulty very, very quickly. Today, when you want to make what's called enemy AI, these are scripted responses for things that happen in games. And it's expensive to do, and it fools nobody. So we can increasingly rely on the most expensive part of building. This means we can increasingly rely on AI for the most expensive parts of building and operating online games. So let's think about this quickly in the wider context of our industry. So we can think about the future a little more clearly. 150 years ago, Edison invented the recording device. And for the first 25 years or so, only a tiny fraction of people in the world tried using it because it was so crude. Today, they have cloud-based streaming music with us at all times. I'm sure many of people in this room use something like Spotify or Pandora. That's with us at all times today. And so from this humble beginnings, we have massive impact, economic impact, if not social impact, because music is all about communicating emotions across cultures, and it's a whole gigantic media industry. Now, 25 years ago, in the mid-90s, NEXON invented the online role-playing game, and what's clear is that we're just beginning. We're just beginning to learn the tools, as I mentioned, and a few years from now, the tropes we use in video games today are going to be laughable. But alternative realities will be part of our everyday lives. You may have seen the TV show Westworld. Our games will evolve over time. We kind of joke sometimes internally to something like Eastworld. You'll be living in this deep world every day. Your virtual world will be highly tuned to your abilities and preferences. And because of that, you want to live in your virtual world all the time, or at least a portion of every day. This is, for some people, they think of this as a dystopia. I actually think for a variety of reasons this is pretty cool. But what's important for investors is that this is the direction that we're heading with online worlds. The underlying technology to pull this off is not at all scarce. This is not hard stuff. Many companies are competing to provide it. Just like cloud services, AI tech may soon be a commodity, like the power grid, that we as game developers can draw on at any time. But what is scarce is the companies that have the ability to build virtual worlds and keep doing it well for years on end. Very few companies on the planet can do it well. And I know this because I've been trying to buy those few companies for decades. It's extremely hard to do, and the rewards over time go to the experienced companies. So bringing this back to you, the investor. For you, the investor, the mistake is to see the industry as it exists today or in recent past. To think that we're dealing with the industry today is like thinking that the music business in the time of Edison would not advance much from the crude needles and hand-cranked drums. There are very few companies that we are thinking about these profound changes. And these are the companies to watch, since these are the companies that will own the future of video games. Now, how do you find them? Start with elimination. They are not spending too much time talking about App Store rankings. They are not talking too much about Christmas releases. They often won't be very articulate about your questions about the latest trend. But what they will do is they're going to surprise you. They will almost always do things very differently than the rest of the industry. Our industry is filled with those surprises that nobody understands, but that end up generating billions. What you're actually seeing, or what you're usually seeing, is a small team who is very thoughtful about what a game really is and then executes on this. Often they'll make a lot of mistakes along the way because innovation is really hard. But to use some examples, as you see here, think of GTA 3. This is the game that came out when I first entered the video games industry for real at Electronic Arts. It changed the way we think about games. It created a whole new category. And the economics over time were incredibly powerful for the company that publishes that game. Or Battlefield 1942, or League of Legends, or Minecraft, or Clash Royale, or MapleStory, or Dungeon & Fighter. I promise you, nobody saw these games coming, and their creators and management teams were not at all polished at talking to investors. And yet these are the franchises that push the industry forward, and they are the biggest moneymakers of today on a very consistent basis. So that's the end of my presentation. I hope that it's been a little bit useful to you. I think we've got some time for questions still. Thanks.
Owen, thanks very much for that.